Welcome. All right, welcome back to Halftime Report. Well, we're talking about a lot of companies that have reported their numbers, and industrial gear and material handling equipment major Elecon Engineering posted quite a strong set of numbers actually. The revenues for this quarter are up 43%. EBITDA is up by 71%. And, you know, if you look at the 9 months figures as well, it's been a pretty solid performance that Elecon has seen. 26% growth in the 9 months at 1,100 crores. Kamlesh Shah, the CFO of Elecon Engineering, joins in. Mr. Shah, good afternoon and thanks for joining us. Tell us, you sitting on a base of around 1,100 crores 9 months of this year. What will you do by the end of the year, by the end of FY23? And you have a guidance of 2,000 crores revenues by FY24. Are you on track to achieve that?
Yeah, good morning. Thank you. As we already discussed earlier also, we are quite confident about this current year number. On consolidation, we are expecting 1,500 crore and we are confident that we will achieve that. And next year guidance, we are sustaining 2,000 crore for FY24 on consolidation.
And what's the order inflow been in the second half of this year? You had a target of 750 crores coming in. Do you want to change that? And at the same time, margins, by the end of this year, you were targeting about 22% odd. The first 9 months, you have done about 22.3%. That sustains as well, is it?
Yeah, that will sustain because marginal changes on account of product mix. But at the end of the year, we will be at least definitely at 22% on a consolidation, my EBITDA margin.
Okay, 22% margins. Can you give us a sense of how the export markets are doing? Because you did expect a lot of orders to come in after Christmas. How was it in Q3? What was the breakup? And how is it panning out right now? Because a lot of companies have spoken about the weakness in export markets. How is it doing for you?
Yeah, it may be, but we have put our strategy right, and we are just working. Our thrust is more on exports and overseas business. And we are putting all our thrust on that, and we are combining consolidation all our overseas operations, and we are putting the strategy right. We are having our international conference somewhere in February at Doha, where we are going to discuss about the next line of strategy for next 3 years.
Mr. Shah, I think my colleague's question was more to do with: are you seeing any slowdown in any of your export markets?
No.
Any delays in decision making by clients?
In fact, we are thinking that that's an opportunity for us, and we have to grab that opportunity in the European market.
Right.
And we are putting more thrust on the OEM markets. That is where our strategy is.
You didn't speak about the order inflow. I mean, what's the current order book that you're sitting on? What's the kind of inflow that you're expecting? Because 2,000 crores next year in terms of revenue would mean a 33% jump over this year's guidance that you have. What gives you this optimism?
Yeah, it's because it's realistic for us. The only thing, external factors like COVID and that kind of unforeseen circumstances, if there's anything previous, maybe related to war, it may have the impact. Otherwise, on a normalcy, that my target of
Mr.
2,000
Shah,
crores.
yes, we do get to your point that yes, even export markets are doing well, but the order inflow is a number that the investors would like to know as well. So what has the order inflow been till now? What kind of orders are in the pipeline? So by the end of this year, what kind of order book are you expecting, and which sectors is this demand coming from?
My open order position as of 31st December is to a 720 crore on console level. And we are having some kind of orders. We are at least working very hard for some OEM also on the overseas market. And once it will get material, it may go on a ramp up basis, not immediately will get, but I think we are working very hard and we are right on our strategy.
I didn't what was the order book you said?
As of 31st December, my open order is 720 crore.
720 crores, okay, that's the open order book. Can you tell us within the defense vertical, what is the kind of orders that you've got up until now, and any order visibility from defense?
My team is working, but presently we can't say what the order we are going to expect in the next year or maybe in the coming period also. But presently, my order from the defense sectors is nearly 130 crore.
And your material handling business, I mean, that has relatively lower margins as compared to the overall business. Material handling has margins of 14% as against the overall margins of about 22%. What's the plan of improving margins there, and what kind of run rate can this business go at going forward?
We are not very aggressive on material handling considering the current situations in the market in India. We are focusing mainly on the supply part and the after sales services, and we'll continue the same in the next year only. In 23-24.
Okay. So you're talking about defense order book being around 140 crore rupees. Can you tell us what is the high margin segment for you? Is it defense, is it steel, power, or do you work on same margin profile across all the segments?
No, it is not so, because our catalog product, generally what we understand as a standard product, will have the one margin, which is standard in nature, whereas the engineer product, which we understand as a customized product, is having that is, better margin, because there, we are putting the designing part also, we are giving the complete solutions to the customers. And that is also very high value in order also.
Okay, all right. We'll let you go on that note. Thanks for joining us, Mr. Shah, and giving us an update on the business. That's Elecon Engineering. Good numbers coming through, and they're quite optimistic going forward as well. Let's slip into a quick break. On the other side, we'll get you a conversation with Bharat Puri of Pidilite. It's one of the big losers today after the Q3 earnings disappointed. More on that coming up.